The total market share of popcorn in India is roughly about 8,000 crore. The government has gone to tax this 8,000 crore to collect taxes from the poor people and the middle class. My dear friends, from 2017 onwards, fortified rice kernels have been taxed at 18%. The rice which is consumed by poor people is taxed at 18%. The total market size of the second-hand car in India is roughly about 2,90,000 crores. And India is a country without a social security. If taxes are imposed, the question is whether My dear friends, Honorable Finance Minister Mrs. Nirmala Sitharaman today convened 55th GST Council meeting at Jaisalmer, Rajasthan. It was with a lot of expectation that the common people had, wherein they expected that the GST will be reduced for most of the items which middle class and the poor people use. But whereas in the meeting, contrary happened. Government went on to increase GST for many of the items. After the GST Council meeting, the entire country is today talking about taxation on popcorn. We commonly call it as now popcorn taxation. It is unfortunate to note government went on to tax it. My dear friends, we all know popcorn is a poor man's snack. Unfortunately, popcorn has been levied GST. In taxation of popcorn, it is in three categories. First category, popcorn with salt and spices, if unpackaged, will attract 5% of GST. That means 2.5% of CGST, 2.5% of SGST. Second category of popcorn is pre-packaged popcorn, which will attract about 12% of GST. And the third category of popcorn is caramel coated popcorn, will be taxed at 18%. Why did I say popcorn is a poor man's snack? Today, the total market share of popcorn in India is roughly about 8,000 crore. Why is it 8,000 crore roughly? Because common people consume, masses consume, and when masses consume, the market share increases. It is expected that every year, nearly 13.4% CAGR is expected in the growth of popcorn market. When this is the level of growth that the popcorn market is going to see, and when it is a poor man's snack, when it is a middle class snack, the government has gone to tax this 8,000 crore to collect taxes from the poor people and the middle class. In other few years down the line, popcorn consumption is going to increase. Knowing this trend that the common people are consuming popcorn, the government of India, along with the group of ministers representing the respective state, has taken a conscious decision to tax popcorn. But the fact to be noted, as I said earlier, popcorn is a snack for the poor and the middle class. When you go to a movie, compulsory you go to a stall and buy a popcorn. Certain times popcorn is sold in beach, or certain times popcorn is sold outside in platforms. We buy popcorn and common people consume it because it's a light snack and also it is affordable. Actually, the taxation should be progressive. Country should celebrate higher income tax collection, progressive GST collection. Whereas in our country, as you may see, after the GST came in 2017, most of the products which the common people consume, poor people consume, a middle class consume, taxes are increased under the GST and GST collection is going up. That is not a fact to be celebrated by the government. Considering this fact, the government should reconsider removing GST on popcorn because it is a poor man's snack. The next product on which GST has been rationalized is fortified rice kernels. These fortified rice kernels are consumed by the poor people through PDS system. It's a rice where certain process is involved, where they make the rice to be more nutritious with vitamins and nutrients. Accordingly, the ultimate consumer of fortified rice kernel is the poorest and the poor in this country. But whereas it was taxed at 18% from 2017 onwards. My dear friends, from 2017 onwards, fortified rice kernels have been taxed at 18%. The rice which is consumed by poor people is taxed at 18%. What should have been the step that the government should have taken with respect to fortified rice kernels? They should have reduced from 18% to 0%. But whereas government has again went on to consciously tax it at 5%. It is unfortunate to note, even though the government knows that fortified rice kernels are consumed by the poor people, they went on to tax it again. Accordingly, it is just not the union government who took this decision. When a GST council meeting announcement comes, people should understand it is both union government as well as group of ministers from the respective state who participate in the GST council meeting have agreed to tax it at 5% on the fortified rice kernels. My dear friends, in the GST council meeting, they have also increased the GST rate on the second-hand cars. Who buys second-hand car? When poor people move to lower middle class or lower middle class move to upper middle class, they tend to buy second-hand cars. The government is not even considering the situation and they are taxing it at 18%. Now they have increased the GST rate from 12% to 18%. The total market size of the second-hand car in India is roughly about 2,90,000 crores as of now. It's expected to be around 5 lakh crore by 2030. That means the tax which is increased from 12% to 18% is on 5 lakh crore market size of second-hand cars. As India is now emerging to the top 5 car buying countries in the world, even taxing second-hand car is a regressive step taken by the government. My dear friends, if you are deciding to buy a second-hand car, you should have in mind you pay 18% of GST on every car that you buy in the second-hand car market. Why people move from new cars market to second-hand car market is because of the higher road tax imposed by the respective state government, adding up with the GST already in place, higher GST rate on the new cars. So the people are now trying to move to pre-owned cars or sparingly used cars or second-hand cars where they can save on road tax and many other expenses which they have to incur while they buy new car. Looking at the change in trend among the people, especially the middle class, the government wanted to take the due share in participating in the transaction so that they can increase the tax rate to 18% and collect more taxes so that the revenue for the government will increase. This is squarely a regressive step taken by the government. My dear friends, beyond all this tax increase on various goods and services, the government is now contemplating to bring Calamity CIS of 1%. Remember, my dear friends, when GST came in 2017, government promised that there won't be any tax other than the GST. And the promise we can see in the campaign, one nation, one market, one tax. Whereas you know what is the story of the GST today. Remember the times apart from the excise duty, we also had multiple cess. So Honorable Finance Minister late Shri Arun Jaitley, when he brought GST in 2017, he promised that there won't be any cess that will be included as part of the GST. But whereas now government is crossing those promises. We all know about doctrine of promissory estoppel, where to ensure the constitution is upheld, doctrine of promissory estoppel is very, very important. We all know that the GST came because of Article 279A, brought as a constitutional amendment to ensure that the free flow of input tax credit happens. Whereas now, government is contemplating to bring Calamity CIS. What will happen if the government brings Calamity CIS? Let's assume that GST is about 18% or 12% or 5% or 28%, as the case may be, on a particular goods or services. Then adding up that 1% will increase the GST, and that 1% will be on price of the product or the service plus GST. On that 1%, there is going to be a cascading effect. The question comes, whether on that 1% input tax credit will be allowed or not. My dear friends, the government is contemplating as of now. They have tried to representatives of Uttar Pradesh, West Bengal, Andhra Pradesh, other states to devise procedure and systems for implementing 1% of Calamity CIS. My humble request to the people is that you must understand this taxing structure because you have no option to voice on these issues. Only when you understand why these taxes are brought in, what is the reason these taxes are brought in, how these taxes is going to impact your price or your earnings, because every 100 rupees you earn, first share goes to the government through taxation, income tax. 2, next share goes on consumption, you pay GST. And third, you incidentally save. It should be vice versa. You save, then you consume, then you pay tax. But the structure here in India, once you receive income, you pay tax to the government. That is income tax. Two, you on the consumption, you pay GST. Then incidentally you save. And India is a country without a social security. If taxes are imposed, the question is whether there is a social security that the government is assuring for every person in this country, that is about 1.4 billion population. So this calamity cess of 1%, the ideation by the both union government as well as state governments is definitely not advisable, not encouraged, because it will add up to the price of the product. Also, it will increase the inflation and it will affect the GST structure, because that 1% calamity cess may not be eligible for input tax credit, may be added under the block credit under section 17 subsection 5 of the GST Act 2017. So my dear friends, we have to be cautious. Look at all the announcements of the GST Council, understand the impact to the market share, understand the impact to the growth of that market, understand the impact it could have on the poor people, understand the impact it could have on the middle class, and ensure you understand the GST structure, because every 100 rupee you earn, the tax is paid by you in both income tax as well as GST. So you should be cautious. Every one rupee tax increased goes out of your pocket and it goes to the government. The question comes whether government delivers social welfare programs to the people from the money that you paid is also the next question that you should always have in mind. Let us all in the days to come look at what are the different changes that are happening in the GST scenario, GST law, and we will see what more changes will be effected in the days to come. Thank you.